What's up, guys? It's Rob here, and today I'm going to be talking about the massive dip that we just saw in stocks. And if you look at the chart, you can see what I'm talking about. The S&P 500 just moved down about 2.5% from highs to lows right here over the course of about 2 hours, and that's very scary to a lot of people. However, it's not very scary to me. In fact, it looks like a good thing to me, and I'm going to explain why. Overall, I think this is pretty good. I'll explain why it's happening first, just so that you guys are aware that Jerome Powell, head of the Fed, just warned of some pain ahead at a speech he just gave as the Fed continues to try to bring down inflation. Now, what's been going on in the stock market over the past month? A lot of people have been big fans of, right? We've seen a fairly decent rally. If you look at the yearly chart, you can see we recovered fairly well from the lows over the past 30 to 40 days. And now we're starting to see a little bit of a dip again. Now, what's causing the rally, what caused the rally was actually that we saw inflation coming down month over month. We saw a big decrease in inflation. A lot of this caused by oil and energy prices. We can talk about those for a little bit too. But overall, people were excited to see this because they thought that it might mean the Fed wasn't going to be as harsh towards interest rate policy. And Powell is saying that that is not the case. He's saying that the Fed is still going to attack inflation that's running near its highest level in 40 years. He wants to continue being persistent with these inflation or with these interest rate hikes to really beat it down to make sure that he doesn't prematurely stop fighting inflation and let it get out of control again. And that's understandable. It's kind of close to what a lot of people were probably expecting would happen. Some people might have thought, oh, that as soon as inflation went down a little bit, the Fed would ease back. But a lot of people were probably also expecting that when inflation was coming down, the Fed would persist for a little bit. And that's essentially what he said, right? He's saying that eventually they'll want to be a little bit less strict with these interest rates. But for now, they're going to continue on the course they've been going, raising interest rates. And for anyone who's unaware, the reason that higher interest rates is actually a bad thing for stocks is because if you can put your money in some kind of savings account and yield a pretty high interest rate on it, then there's not as much incentive to throw your money in the market where you're looking for just a similar, return on your investment, where there's also potential downside, right? So it makes investing a lot less interesting to people, right? When they see that interest rates, you can just easily throw your money into a savings account and get high interest rates. There's no need for a lot of people to throw their money into stocks. And also it makes companies that are out there that are operating with a lot of debt, makes them less profitable and less likely to be profitable soon because they have to pay higher interest rates on their loans. So it's a kind of a double whammy for the stock market. It does tend to drag stocks down. That's been a big threat for the stock market this entire year. Just the idea that these rates have been going up, it has taken stocks down, but I don't expect this will be the case forever. I think that eventually as inflation simmers over the next couple of months, next couple of years, we will continue to see stocks go along their historical trajectories of upwards price direction. And you can see that even in the price of oil this month, just in the month of August, we've been remaining much lower than where we were in July. So I would expect that we could potentially see inflation coming down in the next month's CPI reading. Not that the Fed is necessarily going to change their stance just because they're seeing a second month of inflation go down. In fact, Powell said that the Fed will not be swayed by a month or two of data. It's going to take sustained data. He's going to want to see that inflation has been going down for a long time, not just a couple of months, but maybe 5, 6, 7 months before he really changes course. However, that doesn't mean that stocks, in my opinion, aren't great buys because this is a temporary catalyst that we're dealing with. I don't expect that the Fed wants to keep inflation or it wants to keep interest rates elevated for a sustained period of time. They know it's not the best for economic growth. It makes it tougher for businesses to get started. It makes it tougher for businesses to operate, and they want to get back to a place of growth, but they do want to conquer the inflation that we've been seeing over the past 2 years now, which has just been skyrocketing, and it makes a lot of sense. It's actually good for the economy that they're going to be quelling this inflation, and overall, I think we could be entering a much better phase of economic growth when we can continue to get back to these lower interest rates and not be massively worried about the inflation because there's not too much new stimulus. Obviously, Biden just canceled a lot of student loan debt. That's another form of stimulus, which is going to have some impact, but it's probably not going to have as direct of an impact on inflation as just sending out checks in the mail to people, which is what was going on about 2 years ago. So overall, there's something really important that you need to realize about not just the stock market, but everything in life. And it actually comes from a great Stoic philosopher and emperor of Rome, Marcus Aurelius. He says, the happiness of your life depends upon the quality of your thoughts. And that applies so strongly, not just to everything in life, pretty much, but also the stock market, because you could look at this massive red day and say that it's horrible and be very disappointed and be very sad whenever you see your account moving down in value, whenever your portfolio is worth less than it was the day before. Or you could also have a different type of thought, a thought that perhaps says, all right, this is a great buying opportunity. It's a great opportunity to buy the dip, to lower my cost basis, and to buy up more shares of stock than I could before for less money, and then hold those over the long term if they're companies that I believe in. And if you guys believe in some stocks over the long term, then you should actually be excited to see these kind of periods where people are getting a little scared, where the Fed inspires people to be a little fearful and to sell off some stocks, because that's going to allow you to get more shares of stock and hold those in the future when those shares are going to be going through hopefully a less tumultuous time and could become much more valuable. And that's just how I view it. That's how I keep a pretty positive mindset regarding these changes and these updates that we get from the government or the Fed, whatever ends up taking the stock market down on any certain day. I just view it as a good thing as long as it's not overall defeating my thesis that stocks will continue to do well over the long term. If there's nothing that I can see that's meaning that the stock market's going to be crashing perpetually, as long as it's just a short-term downturn, then I'm not too worried about it. And that's just my opinion, not financial advice. Obviously, you guys don't have to listen to anything I say, but if you appreciate it, feel free to subscribe to the channel, hit the like button on the video. And other than that, keep in mind, not financial advice. I hope you have a great rest of your day. I'll see you in the next one. Bye.